Neerad Sharma, the head of strategy at NCC, is joining us on the show to talk to us about their earnings. Neerad, hi, good to be speaking with you. Well, it's a good set that you've delivered this quarter. Does that mean you're confident enough to increase your top line guidance? I believe it was 15% for FY25 earlier.
Yeah, very good morning. No, we do not really intend to increase our guidance. The guidance that we have shared with the street is revenue growth upwards of 15%. And as we speak, we continue to stick with the same target.
Okay, so you're not looking at increasing your guidance further, at least on the top line front. But what about the margin band? Earlier, I think it was expected to be high single digit, 9.5%, 10%. Is it likely to head into double digit by the end of the year?
At the start of this financial year, we had shared the margin guidance with the street, that is 9.5 to 10%, and we continue to stick with the same number. Hopefully, we should be able to hit that number.
Mr. Sharma, also wanted to understand what the execution pipeline is looking like. What is it that you witnessed in the first half and especially in the quarter gone by, and what's the visibility going forward?
The execution has been a bit subdued in the Q2. We have witnessed some extreme weather events, The monsoons are okay. What really worries us is the extreme weather events. What we have seen is excessive rainfalls at couple of, sites. So this is something that is reflective in the performance of the Q2, which is sort of flattish. Going forward, I think the monsoon is very much behind us, and we should be able to achieve good growth in the Q3 and Q4. And we have already, as I have shared with you, we are already talking about a revenue growth of 15% upwards. Hopefully, we should be able to hit that number.
Right. Walk us through the outlook in terms of your order inflow, in terms of what is expected for the rest of the year. Where is it that you see the major orders coming in from?
The order inflow guidance that we have shared with the street is a band this time, which is any number between 20,000 to 22,000 crore. You are aware that first quarter has been an election quarter, and we have also felt the after effects of the central election in the Q2 as well. So that is the reason the awards that we have received in the Q1 and Q2 are, appear to be a little less, than the, say 50% target. But if we really take into account the announcements that we have made for the month of October, then the total order inflow for Q1 plus Q2 plus this October is 8,256 crore, which is about 41% of the lower band. So to answer your question specifically, we have already achieved about 41% of the number. And we are quite hopeful to, achieve the inflow guidance that we have shared with the street.
Okay, so that's the order inflow target that you have in mind. But I wanted a sense on the debt profile as well, because you had a target to bring it down to 500 crores. If I have it right, it's still above 1,500 crore mark. Are you confident about scaling it down to 500 crores by the end of this year itself?
We don't wish to revise them. In fact, the number that we had shared with the street is 500 crore net debt. And if you really see the net debt number for the last financial year, that is FY24, it is in the same range. Generally, the Q3 and Q4 are relatively better quarters for us. So we are hopeful to achieve that number, 500 crore plus net debt.
I want to ask about, your susceptibility, of course, to politics. And, given that Maharashtra and Jharkhand are the key geographies that, contribute maximum to your order book and revenues, wanted to understand what's the thought on the upcoming elections as well. And does it seem like that's going to, stay intact in Maharashtra, that is?
Hopefully, yes. See, the elections are part and parcel of, a thriving democracy. We cannot just wish it away. That said, the kind of orders that we have booked from these two key states that you just talked about, that is Maharashtra and Jharkhand, the kind of funding, the kind of importance the projects that we have bagged really carry for these respective states, we have reasons to believe that these projects should move forward, irrespective of the election results.
Okay, fair enough. And what is the outlook when it comes to your expectations from the Jal Jeevan Mission projects? What kind of opportunity size are you envisaging and what it could do for the sector?
As you are aware, we have been able to corner sizable chunk of the awards from this Jal Jeevan Mission, and we have been able to execute substantial chunk of the projects. As we speak, we have about 5,700 crore order from this mission. Hopefully, we will get to see some more awards from few states, but we have to wait and watch.
Thank you so much for taking time out and joining in. Those are some of the key highlights from the management of NCC, maintaining a 10% EBITDA guidance and looking at a net debt level target of 500 crores for FY25.
If you like this video, then like, share and subscribe to ET Now.